What's going on, everyone? I am Charles Moon, the disciple of trend, and this is my podcast, Buy High, Sell Low. Just want to mention that stock and stock options trading does involve a substantial degree of risk and may not be suitable for all investors. Past performance is not necessarily indicative of future results.
What's going on, everybody? Welcome back to the Buy High, Sell Low podcast, infotainment at its finest, with your host, the disciple of trend, Charles Moon. And today, we're going to talk about something new that's coming for the Momentum program. In fact, we've been basically beta testing this in the actual room live. And then last week, we started with the beta testing of the push notifications and email notifications. And now, we plan on bringing it full go September 3rd, which is the first trading day of September. Ladies and gentlemen, you're seeing a quick glance of this on screen right now. But I do want to talk about where we're at in regards to the time of the year and the state of the market. This is a great time of the year to actually be active in the markets. We generally see big market moves. Sometimes it's trending moves, sometimes it's volatility. We saw a little bit of that towards the end of September last year. But throughout September, we were on a pretty soft, easy grind up with a bit of sideways action. In fact, there was very limited interest. And then basically all hell broke loose in October into November and then December. Good Lord. And there's a lot of fears of this cycle, this washout, taking place yet again towards the end of this year. Not surprising, right? We have Brexit. We have the fears of recession with the inverted yield curve. And then we have the, it seems like forever ongoing tariff/trade war. But this tariff talk is what drives me crazy because the markets are so reactionary to each individual tweet, piece of news that's coming out. And it's not like the market is taking huge swings, right? We're not like before where we're taking 3%, 2 to 3% moves in a day, continued move, sustained somewhere between 5 to 7%. It's more like 1% up, 1% down, 1% up, 1% up, 1% down. But lately it's been like 1% up, and then halfway through the day it'd be 1.5% down, back to 0.25% up. It's difficult. Now, I'm not saying it went from being 1% up to being 1.25% down. It's happened, but I'm saying it's taken that swing, so we'd be down 0.5% and then rally back, or vice versa. So during these trying times, it's difficult, or getting more difficult, to hold certain names basically in the broad market overnight because sentiment is changing very, very quickly. So this zone methodology is coming out at a great time because this is designed to capture short-term moves. Now, my clients are the ones that got this information early. I'm not yet ready to give away everything, right? My clients take first priority here. So forgive me for not disclosing everything. But you could see a lot of the indicators on screen. That's not the actual premise of what I am going to bring today. The beauty of what I'm going to showcase today is what we would call predictable ranges. And then it helps our clients. It helps our clients plan. It helps them if they take the underlying or an options play. And it gives them really definitive entry points and exit points for short-term trading. Right? We're not looking to hold overnight in these positions. These are designed to be what we would consider intraday swing trades. I'm going to give you 3 names to keep an eye on for the rest of this week, whether you want to take it as homework or ultimately you just want to see how this is going to play out, by all means. But we'll have to wait and see. We'll do a follow-up video for it. So we're going to start today with Apple. Everybody knows about Apple. Everybody watches Apple. Everybody wants to buy Apple. Okay, maybe not everybody. People do want to short it because of the trade news, but ultimately, Most people want to have Apple in their portfolio. So what we're seeing is more bullish behavior in Apple. And you could see that there's a lot of support coming into play. Not just off of this little teal blue line here, but also along this edge. Now, this edge is what we would call a distribution box. I'll break it down very quickly. These bars, these shaded ranges in the background, not the color, but not the colored box, but these color sideways bars. They're what we would call volume distribution, or distribution at price, or volume at price. In essence, what you can see here is this volume profile has a wide distribution up here, a wide distribution here, but a gap in between. We call that the bell curve. So right now what Apple is doing is filling this gap with a distribution or volume. In turn, if we had interest and distribution here and the stock price has gone up, that interest, that level of volume that came into play ended up being bullish for that name. And if we have this distribution and extension beyond, we could have potential breakouts, or at the very worst, acceptance at higher prices. Ultimately, what we're saying is we know where support and resistance can come in based on previous volume and interest in this particular stock. We know where it could possibly go, and we know what outcomes can possibly be. Now, we do cross-correlate this with major technical levels on the daily chart. But for illustration purposes, I am just going to showcase based on the new zone methodology where we're going to find predictable opportunities. For me, Apple looks bullish. Now, I do want to preface this by saying that right now, the markets are down big in futures. So we'll have to wait and see how this opens up. But let's say markets recover and we look to be pushing up, meaning we're going to have a bullish market. Even if it's 40 points in the Dow or 100 points in the Dow, it looks to be more bullish than bearish. In that instance, short term, we expect Apple to head towards the upper portion of this range in this purple rectangle. That in turn means that Apple is projected to run towards 210 to 210.75 or 210.75. Now, if it gets above this level and closes above this level, let's say around $211, the ideology is that if they sustain that price point as support, that the short-term bump is to 213.50. Now, there's been a lot of resistance. There's a huge edge buildup right here, which is why it's at the top of that upper projectable range. But considering that Apple closed at 208, a 5.5 point jump in the next day or two will be pretty big. And if it gets above this 213.50, of course we have this major swing high. But the belief is that if it gets to this level and tests, if it rejects, we know that the distribution is going to go higher, and we know that we have a clear-cut resistance point as it's acting as a double top. In turn, if Apple fails to hold right around 207, we know that the downside distribution is to this 205.50-ish to 205 quarter range. And in turn, it would be looking to fill the gap. The gap will be at 205.52. If it happens to go through and trade into what we would consider the bearish zone or the red zone, yet again, we know that distribution can bring it down to 202. If it fails to hold this level, watch out below. Yeah, that 201 evens mark is going to be pretty definitive in terms of support, as is that $200 price. But that also means that if it gets into this range and it gets below 205.50, we already know where it's earmarked to go. So while we don't know exactly what's going to happen tomorrow, we can't predict the future. We have a quick ideology of how to play Apple in the short term. And again, on an intraday spectrum, you're not looking for 10, 20-point moves unless the market is blowing out in one direction or the other. If it's just a normal and easy market And even if it's a fast and swift moving market, as long as it's not volatile back and forth and we're going directionally, you'll have a clear-cut path and understanding of where Apple can go. In my opinion, if we open in a bullish market, we're going to look to fill out, fully distribute volume within this range. And if we get acceptance, we're looking to go higher. If we get acceptance, we could possibly be moving lower. Now, I will say once we get to this yellow zone, we're going to want to see Apple find a lot of support at this and at this lower edge of the yellow box, and then look to rebound back up. And then hopefully what would end up happening is that Apple gets right back into this purple zone and on its way back up. So it's all going to be dependent on several different factors, right? Is it going to get back into this level once it escapes? I suspect that could only take place if we hold this price range right here. Now let's talk about Intuit, INTU. Intuit is kind of already in that distribution plane just like Apple is. And for me, Intuit actually has a much smaller breakout zone, but that's because there's been very limited trading. And what actually ended up happening was a major reversal, right? My candlestick traders know. Major reversal. As we swept down to the low end of this yellow box, what ended up happening was it broke on up, it jumped up into this purple range, and now there's acceptance. How is there acceptance? Because once it got back in, ladies and gentlemen, where did Intuit hold? It held the bottom of that box. It now has traded up towards that upper portion of that box. So if it could break free, again, in an uptrending market, we're looking for acceptance into this range right here. And if it's going above, of course, we will have to be attentive of that potential double top high. But if we break above, we could have our breakout there. It's pretty simple. We break down and back into this yellow box. If this lower level fails to hold yet again, we know exactly where Intuit's going to be earmarked. That means it's going to get acceptance into that 272 to 265 range below. Intuit is a much larger frame because of the volatility and the recent news in the name, aka earnings. So we know that this could be a big mover. But coming up into this level with that strong of a reversal, with this huge amount of volume distribution that took place, I mean, it held this price level before, if you noticed, held this price level and accepted it and then jumped above. We're seeing that same behavioral pattern come into play again. And this time, if we break out, we're talking about a pretty large jump. We're at 288 with the possibility of getting to that 293, 295 range, all within a day, all based on where our calculated zones will come into play. And this isn't some mathematical calculation. Listen, this is purely based on interest, demand, supply at previous price points. Reaction based off of volume. So all in all, we're talking about volume, and volume is king. There's nothing that you can ever hide regarding volume. You can never hide demand because it's the one thing that has to show up, right? A trade takes place, boom, the print has to come into play. So that data is always going to be true. There's no spoofing behind this. It's what we say, money talks, right? And again, when we talk about stock market and stock market trading, money is always going to be king. So we're seeing where the attraction is for this particular equity, which is Intuit. And we're seeing that interest coming in at a higher price point. And if we see that interest, meaning demand, increase at this upper level, we could expect the breakout to take place. But that breakout is going to take place once it escapes from this purple zone here. Stay tuned. Last but not least, we'll talk about keys, Keys. pretty simple here. Again, Keys, another name, another Momo name, a 5G name, making a big jump off of earnings. Huge drop off. Look at the support that came in. Where was our resistance? Right at that purple edge. And as you can see, as we came back towards that lower portion of the yellow box, ladies and gentlemen, demand came into play. Once it got up into this purple box, demand immediately held it into the zone. Now, all we've done is basically go back and forth. So what's happening right now is that Keys is actually consolidating for a big move. If we could actually break above what I would consider the go zone, which is $98, we have immediate acceptance into this upper portion, where the upside target has to be at 101. If we get above 101, expect a really big breakout to take place. Again, in that instance, I can't suspect it'll happen in one day. But if we have an ideology of where that breakout zone takes place, and all of a sudden we have a rolling trend, we have a stock that could go from $98 to that 105 to 110 mark in less than a week. It's a very good return in a short period of time. And it's the same thing here. If Keys fails to hold in this range, we'll have to see acceptance come in, ideally right around 92.50 to 93 evens. And if that fails to hold, there is one tremendous gap to be filled at 89.06. And that's the red zone here. This is what we would call fill in the gap. There's nothing to slow the stock price down from that gap fill. That is why the red box is all the way lowered here. And based on previous demand, the stock has to hold that lower portion. Otherwise, we're talking about a free fall. Now, we're not talking about a stock zeroing out. I'm not going to be that dramatic, but we're talking about a stock potentially getting into the lower 80s very, very quickly. And if you don't think that could happen in less than a week, again, look at a lot of the Momo names, the cloud momentum names. Some of these stocks are starting to unravel where they're well off their highs in bullish market territory. It's crazy, but yet it happens. We just never know. And so in this instance, for me, the drop zone is once it gets below that 92.50 mark. If it closes and opens and rejects at that price, it is going to fill the gap. I can't guarantee anything, but I'll definitely will be playing it towards this level here. I mean, listen, where was the demand? There is none because it gapped above. Now, can you find some support coming into play at that 91 price? Perhaps. Generally speaking, when it gets accepted into the lower zone and it doesn't sustain, where acceptance is not significant enough to the demand of sellers, that means it is projected to go to the next level. Like a magnet, laws of attraction. The smart money would know what the projectable outcome is, which is gap fill. The buyers would look for a bounce at this level. Sellers will be looking to take risk off at this level. Why would they take it here when they could take it down here? So in theory, the zone is just giving you an ideology of where a stock could go, but in a more concentrated measure. And it's defined based on previous demand, most notably where the big money has traded. Now, sure, retail demand could come into play, and we're seeing the reflection of that retail demand. We're seeing these distributions get filled, and ultimately, when they do get filled, we have to make a decision. Is the demand going to sustain and come in at higher price points to drive the stock up and continually up? Or will demand wane and buyers look to take risk off and then sellers decide to prey on that weakness? We'll have to wait and see, guys and gals. We have earnings season coming up here. Actually, no, let me restate that. we have football season coming up here soon. Earnings season is wrapped up. Sorry. That's why I have my Bears gear on. It's that time of the year where ultimately we see the markets start picking a direction. And we may think it may be just plain flat out sustainable, but we've clearly seen, especially during this particular presidential term, that the upside or the downside is never safe. Now, progressively, we have worked our way higher. But if the people, the retail traders, institutional, HFT, are thinking the markets are going to be a ticking time bomb, not because we're overvalued, not because stocks start to feel heavy, but because we're worried about what's going to come out on that news feed during the trading day, that's when things are going to get difficult, because we're going to see shifts in the market. We're going to see bid offers thin out dramatically and big volume hitting it directionally. And we're going to see swings, and it's going to continue to happen. And in turn, until we settle out, I'm not comfortable being fully weighted up or down, but I am very comfortable in trying to take advantage of that opportunity intraday. And I believe that with the new zone methodology, on top of the entry points, but with the projectable targets, it'll make things so much easier. During wild times of volatility, sometimes the calming force is having a plan, ladies and gentlemen. And that's what this whole beautiful, colorful rectangle on your chart is really designed to be. Help you have a plan. Have you understanding where your weak zones are going to be, your strong zones are going to be on a day-by-day spectrum. I'm going to teach my trading room how to draw these out. It don't require you to draw it over every day. It will require you to draw it at least twice a week, depending on how the markets are. But we'll have to wait and see. What I want you to do, if you watch this video, is to watch it again. Keep tabs on Apple, keep tabs on Intuit, keep tabs on keys. Keys for me, it's pretty simple. It's ready to break out. And if we get the bullish market, we should see keys go. If it breaks down below 92, there may be a momentary pause at 91.5, but I truly believe we're going to fill that gap towards that 89s. Let's go towards Intuit again. Intuit already ready to break out. It gets above 289. Realistically, it's accepted and should be rushing its way up towards 293 halves. Above 293 halves, yes, there could be some major resistance at 295 3/4, but I truly believe that they'll be working its way up higher, potentially to test that 300 mark. If it fails to hold above 284s, the acceptance towards 280 half is going to be important. It either it rejects and fills this gap and then re-enters back into this purple zone, or it gets accepted into this into this yellow range, and it'll be pushing its way towards that lower portion at 274. And major support has to come into play. Otherwise, if it gets below 272, the downside is all the way towards 266 and lower. You heard me right, 266 or lower. With Apple, I'm pretty bullish on it. If we have any if we have any upside push in the markets over the next day or two, we want to see Apple break towards that 210 3/4 to 211 price. And if we could get above 211s, it should be a pretty quick shot towards 213s. 213.50 is going to be major resistance for Apple. The true breakout zone, I believe, is above 213.50. If 207 fails to hold for Apple, we're looking at acceptance at 205s, right? With the potential that they'll be looking to swing it lower. If 202.50 fails to hold, 201 will be the test. But truly, I believe that 200 will be the test. And Apple under 200 spells trouble for not just Apple, but for the broad markets. This is what you have to look at this week, ladies and gentlemen. We'll just have to wait and see. Now, I do have indications that tells me that Apple, Intuit, and Keys are all potential swing buys this week. Now, they're intraday, not meant to be held overnight. And they could be called on Tuesday and or Wednesday, depending on how the markets open up. As of right now, Apple is setting up for it. But until it opens on Tuesday morning, it won't be verified. This is kind of where we could foresee potential opportunities because of the shape, the slope, and the structure of the methodology. And that's where I want traders to be at. I don't want them to look and then decide. I want them to be prepared and then decide. Because you know what you should be looking for. You know what you need the markets to do and what the stock has to react to. And if all of those come into play, there should be no hesitation to hit that trigger. The only hesitation should come into play is what the broad markets are doing. It takes a lot of the mental anguish out of trading. When it's rules-based, it's pretty simple. Now, again, I won't break out the zone methodology as of yet. I'm still just starting to teach people in my mentorship program. I'm just starting to break it out in my program. But I promise and I assure you, you will get all of this information out there and you will be able to take advantage of it. And what I'm going to do right now for my clients is teach them how to write out these zones, how to script it out, how to draw them out, and then we'll go from there. I hope this is a bit eye-opening, but more than anything, I hope you take this information and put me to the test. That's what's important. Because if these particular steps take place, whether it's up or down, and then they reign true, while you may think that I'm trying to predict the future, I'm not. I tell my clients, we won't be able to predict the future, but we'll understand outcomes better. We know what outcomes can be. And you plan in accordance. You trade in accordance. You manage in accordance. It's always going to be some sort of a reactionary game with us, right? It is speculative. Collectively, we don't have enough money to shift these stocks greatly in one direction or the other. It takes the broad markets to do that. These stocks all trade over 1 million shares a day. I mean, Apple trades much more than that. But I'm just saying, 1 million shares of a stock like Intuit, that's a lot of cash flow. So think about that for a second. We won't be right all the time, and that's okay. People get too caught up in feeling they should be right when they're wrong. The market tells you when you're wrong. You just have to accept that. And acceptance is an important part of the game, ladies and gentlemen. So like I said, it's not like I'm putting my neck on the line. I'm giving you a lot of information. We'll just have to wait and see how it plays. Maybe none of it plays out the way that I think it is, right? Coming off of the holiday, we could see light liquidity, nothing happening. We could see these stocks go back and forth, and then none of these levels play true. But if they do play true, then I'm just sharing with you the knowledge that I have accrued. And hopefully you can use this information moving forward to benefit your trading. Learn, right? But more importantly, earn while you learn, guys and gals. So listen, if you happen to like this video, do me a favor. Click that thumbs up button. If you haven't subscribed already, subscribe. Follow us on our socials. My company at Prosper Trading. Myself at Disciple of Trend on Twitter and all the other social medias. But more importantly, ladies and gentlemen, if you have questions, drop it down in the comments below. Tell me what you like or didn't like. Tell me if my explanations made sense. If they're right, comment I was right. If I'm wrong, comment I was wrong. But if I'm right, subscribe. Stay tuned because I got more coming. Again, any questions, you can also reach out to me, podcast@prospertrading.com. That's going to wrap it up for this week. We'll have to wait and see whether President Trump drops another bomb. Maybe it's about tariff wars. Maybe it's calling the FOMC. Listen, the fact that he's calling them the enemy of the state, realistically, that's crazy. But more importantly, the fact that he's trying to apply pressure, he's going to be just disappointed. This is a guy he nominated, I believe, that's running the Fed. Listen, we just have to wait and see how this is going to play out. I do know that it's very difficult to play within the trend when there is no trend. If you look at the SPY, which I'm going to pull up here, and you look at it on a daily chart, where have we gone? Guys and gals, you know what we've done? We've gone back and forth, back and forth. Where's the volume distribution? Both high and low, high and low. Now, the one positive that I am seeing is that we are seeing a very slight variation of an uptrend that's taking place here, okay? But that's not enough for me to be bullish. Now, when there's clear-cut resistance that's in play, and by the way, almost all of these are at the 50-day simple moving average. What's really going to be important here is that we break free and we get up into this next level of acceptance, volume distribution. The breakout theory realistically is probably going to be, if we close above, let's say 294.5, maybe 295 and open above that level, but we just need to get the hell up. We need that clear direction. We need this again. That was so good. This was so good. This was even fine. This is so tough. Hey, listen, day traders, that's where we've been thriving. Swing traders, some success. Position traders, good Lord. If you time it right, but it hasn't been easy to time. Things are looking a little bit more bullish for the SPY. We'll have to wait and see. But for now, ladies and gentlemen, if you look at the ES, we are starting to trend lower. And what I'm going to show you here really quick, show you the extended hours trading. Where we had opened, we had dropped pretty low, and we're starting to rally up. So, if we continue to rally on up, and we start making moves to the upside, ladies and gentlemen, we want to keep an eye on Apple and see where we go. Because if Apple can make a pretty darn good move here in the near term, okay, if we can make that move in Apple progressively, and Apple has that breakout, it'll be good for the markets. All right, folks, we'll have to wait and see. Video's coming out soon. Thanks again for watching, ladies and gentlemen. Until next time, go Bears! See ya.
Don't forget to like, comment, and subscribe. Also follow us on our socials, Facebook, Twitter, and YouTube. If you have any comments or questions, you can email me, podcast@prospertrading.com. Thanks, everyone.